So Glenn, tell me, I mean, we haven't seen too much construction lending probably in the last couple of years, really, because of everything been going on in the construction industry.
Yes.
But someone looking to build or renovate, one or the other, what are some of the most important things they need to consider when looking for finance?
Yeah, so a couple of things, I guess, they're different structures, if you like. So the renovation side of things is someone that's already got a property, and the banks are quite liberal in terms of non-structural renovations. So that would be the first part. If they're doing a kitchen or a bathroom, it's a pretty simple sort of a straightforward process in terms of if they wanted to put that onto their home loan. Obviously, we look at their structure a lot, maybe roll it in with the fast track strategy, but they can pull out cash to help with those sort of
What
improvements.
if someone's not just looking to do a kitchen? It's, hey, we're going to put on a second story. We thought about selling, but we've decided to actually do a massive add-on to our current home.
So that situation is a little bit different, I guess, similar to someone that's got a block of land and wanting to build. Banks would look at a construction loan in that situation, in which case they take the value of the current property, add on what the construction is. So if it's a second story, it's a major renovation with extra bedrooms and bathrooms, living areas perhaps going out the back, or a brand new property. So those contracts will get sent out to a valuation firm. They will have a look at what you're doing and what you've currently got, come back with a valuation that the bank feel is fair and reasonable for a
As if it's actually being complete.
As if it's complete, exactly right. And from there, they will release the funding in various stages. So there's usually around about 5 stages for a standard construction loan of a building, of a new house, and probably something similar, although maybe even 3 or 4 for a renovation, where the builder gets paid at a particular stage, but basically for the work they've been done.
So, and then during that stage where the bank is now in the construction phase, they're paying the progress payments to the builder, what actually happens to the loan itself? And let's just say you've taken your loan from 500 to $1 million. When do you start paying on the $1 million?
You pay on the $1 million in that example once it's been fully drawn. So in most instances, you're going to look at interest-only repayments, because potentially you're going to be living somewhere else. So banks recognize that there's an extra expense around a rent or maybe boarding with family. So the repayments on a construction loan are generally just interest-only until it's fully drawn. So in the example that you just gave, maybe the initial loan's $500,000. The first payment is another $100,000, for example, the first lot of works. So your repayments would be interest only on $600 in that example. So then as the works progress, that loan goes up until you hit the limit or the borrowing amount that you've got, and then your principal and interest repayments start from there.
So Glenn, I've engaged the process, I've gone through, my building is just about to finish, about to get handover. At what point does the loan actually change from interest only back to principal and interest?
Great question. And it's dependent on which lender we go to. So some banks will actually allow 2 years. They'll set you up with a 2-year interest only facility. I guess the standard build is somewhere between 9 and 12 months. So they're safeguarding in terms of your own financial situation. If the build was to go over 12 months, they don't want you to have those multiple repayments that are too much of a stress.
So what happens if then I've gone with a lender that has a standard 2 years? I'm in within 12 months and I want to convert it back to principal and interest.
Yeah, no problems at all. So you can do that quite easily, in terms of you need to reach out to the bank and just say, hey, look, I'm in the property now. I want to convert it to principal and interest repayments. Alternatively, you can keep it as it is and just make those extra repayments yourself. So if you did go with a lender that's got those longer terms, otherwise it's generally a 12-month term or until construction is complete. So upon the final progress payment, your next one would then be principal and interest.
So I've also spoken to a number of people and they've said, well, what's the difference getting a construction loan through a bank or actually going through a mortgage broker? What's the main difference there?
So I guess it's the same reasoning behind why you would go to a mortgage broker anyway, and that is obviously the choice of the lenders, the different types of loans that they offer. So various banks, as we've talked about with the loan term, offer different features, I guess. So from a construction period, it's a matter of working with a broker to work out what's the best.
What about if I go to a broker? Do they actually manage the progress payments with the builder on my behalf?
Yeah, and then that was going to be the other part too. Brokers are a high touch points. So there's a lot of service involved. You would send your progress payment report to your broker, and then they would then work with the lender to make sure that the builder is paid.
That sounds good. Is there a cost for that?
No.
So let's say that somebody has a house, it's almost unencumbered. So there might be $1 million worth of equity in there.
Yep.
They're going to do a $600,000 renovation. For that amount of money, do they have to go through the progress payments, or can they just access equity and technically fund the construction themselves?
I would say that yes, they do need to go through a construction, but are you saying something different?
100% I'm saying something different.
Okay, we'll go on.
I'll keep saying.
Yeah.
So yes, technically, you can set up a facility and access equity.
Yes.
So long as you advise the bank what you're doing, and that there can then fund your construction, which you then get to control the funds yourself, and you pay the builder directly, not going through the progress payments. So doing that way, you may get $600,000 literally deposited into your bank account. The bank can trust you to control those funds and pay the construction yourself. Every broker must have a story about people coming to them saying, Glenn, I'm going to do an owner build, I'm going to save a fortune.
Yes.
What do you find the reality is?
Reality is very different. Owner builders tend to start a project with all of the best intentions and get halfway through a project and the intentions change a little bit. We're building the Taj Mahal. We want the gold taps. We want this. We want that. All of a sudden, massive big cost overruns, and then there's significant funding challenges.
There's a reason, don't you think? Banks love lending to real estate.
Yes.
Right?
Yes.
They hate lending to owner builders.
Yeah.
That should say something.
Absolutely.
If they've got the track record of people generally underquoting what it's going to cost them, once a project's halfway done, it's very difficult to go get finance to finish it.
Yeah.
But I think what so many people don't calculate when they're doing an owner builder is their time.
Yes. Yeah.
So if you have to stop doing an income generating activity to spend time building your house, it's costing you money.
Yes.
So I would say 99 out of 100 times, avoid doing an owner builder. Is that fair to say?
At least that ratio.
Correct.
And you're right. So there's huge risk for every party, really, as you said. Someone's going away from an income producing job to put time into their own property. So risk there, family finances, etc. Risk to the bank too, as well. Clearly, maybe falling into arrears or a half-finished product. There's definitely big question marks and big concerns from the banks, and that's why it's really hard to get them these days. A lot have pulled out completely from the space of doing those owner builders.
So if you're contemplating major renovations, if you're contemplating a knockdown rebuild or land and buy, or you're not sure what's the right approach, hey, do you just sell your current house and go buy a new home? Make sure you come and visit us. We could do an analysis on what actually would be best for you in your personal situation, and then run through that in-depth process if you do decide to renovate or build, to show the options that may be available to you and how you can actually help cash flow that and finance that project you're looking to do.